All right, I think we have some critical mass, so we're going to get started. Good morning to everyone on the call. My name is Terry Hill, and on behalf of all of us here at BPM, welcome to our webinar. I'm joined by my partners, Edward, Jill, and Andre, and I'll let them introduce themselves in a moment. But in the meantime, I wanted to just quickly set the stage for our conversation. A little under 2 weeks ago, as you know, 6 of our Bay Area counties were ordered to shelter in place. And suddenly all of us shared a common experience that affected us in both our personal and our professional lives. Client, prospect, and partner lunches have been replaced by phone calls and video conferences. Sport coats have been replaced by sweatshirts and hoodies in some cases, and work meetings on more than one occasion have been interrupted by pets and kids and all other kinds of things. So we share that common bond in our personal lives, but we're also part of the business community here, and our decisions right now affect our employees, they affect our customers, and they affect our vendors. For the week ending March 21st, the Department of Labor reported just under 3.3 million initial job claims, as compared to a historical rolling average of about the 300,000 per week. So obviously an enormous jump. So our environment's very dynamic, and there's a great deal in motion. I think every day additional news comes out. There's guidance coming out from the legislation, and we'll get to all of that. For those of you that don't know us, BPM is a full-service accounting and consulting firm. We employ more than 500 professionals up and down the West Coast, but really truly with roots here in the Bay Area. And our firm, like many others, has been extremely busy this week and last with clients and other members of our communities talking about the impacts of COVID-19. 2 topics recur, and the 2 themes that seem to dominate the questions from all of you, thank you for that, have been about the SBA loan programs and the Families First Coronavirus Response Act, or FFCRA. So let's get after it. We'll begin with a few questions and answers that should address many of yours. And we are hoping you'll ask questions in real time, but we'll leave some time at the end for Q&A. And with that, I'd like to let our panel introduce themselves, starting with Edward. Can you kick it off?
Thanks, Terry. Good morning, everybody. My name is Edward Webb. I'm a partner at BPM's Advisory Services Group. I have 35 years of experience serving small and mid-size clients who in financial advisory and corporate restructuring services. I also sit on the firm's board of directors and management committee. And if I could, I just want to take a minute too. Clearly, this is about people. You guys are all on this call because you've been through dramatic change and you care about your folks. And it is hit home with me. Just yesterday, I got a call from my 30-year-old son letting me know that he's been laid off. So all of the decisions we're making, you know, these are people decisions, and all of the financial aspects of it are filtered through that aspect. So we're looking forward to this conversation, and hopefully you're going to find a few things that are helpful for you. Thanks, Terry.
I'm Jill Pappenheimer, and I am a partner at BPM in the advisory group as well, and I lead the HR consulting and outsourcing team. And we are here to support organizations from small to enterprise that are needing support around the people function, whether that's consulting projects, whether that's strategic initiatives, compliance-related support. We get in from an interim basis or short-term, long-term to support systems and people, processes, practices, and culture. And I have been doing HR my entire career, which I'm very close to Edward in around 32, 33 years, so a long time doing HR. And this is the area that I'm passionate about in supporting people.
Hey everybody, this is Shevchuck. I'm a partner at BPM and I lead our our tax credit practice. So I personally have been directly involved in tax credits for 15 years. We have a lot of experience dealing with government incentives, including payroll credits and dealing with payroll providers and navigating those logistics. We're really excited to have the opportunity to help walk you through some of these complex times and the nuances surrounding these recent enactments. Thanks.
Thanks, guys. All right, so question number one is about people. So on March 18th, the Congress passed the Families First Coronavirus Response Act, or FFCRA. And I think most of us have at least heard about it. Jill, can you walk us through, at least at a high level, what the primary components of the act are and where there may be some tipping points for employers considering what to do about it and what to do with their people?
Sure. So let me just say first that I'm not an attorney and I'm not going to take a interpretive approach in this act. That said, I want to just give an overview of the act, and then as we go through this presentation, hopefully I'll provide some real practical nuggets to support those on the call in terms of how do I actually apply this within my own situation. So the act is in place to support employees that are affected either by being sick themselves or needing to take care of family members, children, in times where schools are closed or childcare is not available. And so there's various scenarios that require additional level of financial support when people go either out on paid sick leave or for what is known now as the Emergency Family Medical Leave Act. So these are extensions of what we had before in terms of paid family leave and FMLA. The FMLA, emergency FMLA, is now accessible to companies that are under 500 employees, where that was limited before in a much narrower category. So going back to the previous slide, the emergency paid sick leave is, and both are applicable to organizations with less than 500 employees. And that includes all U.S. employees that are either full-time, part-time, seasonal, or temporary, and does not include independent contractors. There are exceptions to employers being able to support employees in this way with organizations under 50 employees, and those you have to apply for those exceptions, and we are still waiting on guidelines on what that looks like. But there is opportunity for organizations to apply those exceptions. So the effective date has changed. It was April 2nd, it's now April 1st. And so you count those number of employees based on that effective date. As you can see here, there are various scenarios here that reasons why employees would not be able to work and then be eligible for 80 hours of paid sick leave. Okay, moving to the next slide. So the emergency FMLA is up to 12 weeks, 10 of those paid, 2 of those unpaid. And you can see additional details here around the payment for those 10 weeks versus the 2 weeks that are unpaid. So there's a lot of nuances and details here that I'm not going to go into right now, but also know that there are tax credits available to relieve the employer for being able to implement these kind of support, because the employer obviously has to pay for these the time that employees are on leave. And I'm going to let Andre talk a little bit about the tax credits that are available in these type scenarios.
Thanks, Jill. So as Jill was just mentioning, we're looking to how the government is going to actually implement or offset some of the costs of paid sick leave or people taking family leave. And it's really, the opportunity is to utilize these payments and calculate tax credits that go against your payroll taxes. So there's a couple stipulations surrounding some maximums of how much you can actually take of a credit around both the paid sick leave for individuals who are staying home and self-quarantining, or they themselves are sick. There's a maximum of $511 per day for up to 10 days per individual, and also a $200 per day for 10 days maximum credit for people who are taking care of others. So if your kids are staying home because their school is closed and you are not able to go to work because you're taking care of those kids, there's a $200 per day allotment maximum for generating a credit. So just to very briefly, we want to talk a little bit more about how the rubber meets the road, or how to utilize these credits. So as you're paying for people on paid sick leave or family leave, those are going to be outflows. The opportunity is to calculate how much of the outflow is eligible for a credit using those maximums. And then you're able to restrict the remittance of payment to payroll taxes as in a concurrent type of setting. If you are not able to stop remittance, or if it's too challenging or difficult, or it's going to be disruptive for your company, you can have the opportunity to reconcile those payments on your quarterly payroll tax returns. I'm going to stop there just for a bit, just because I want to share some time with our other partners on the panel. But in a sense, we're happy to kind of talk through some of these nuances and how to monetize the tax savings as a result of these enactments.
Jill, Andre, let me ask an unplanned question. What might be the implications of private equity ownership or a franchise operation in terms of qualifying? Do we know anything at this point? Has anything come out in the literature?
Qualifying for?
The ability to take advantage of these.
Yeah, so I am not aware of any limitations in terms of type of entities, whether nonprofit, for-profit, private equity. I'm not aware of any limitations. Andre, do you have anything to add there?
Yeah, I guess the real big limitation there is organizations with 500 or fewer employees. That's the real big bar that we have to take a look at, and understanding how does that define. Jill touched on it earlier, but that's the big limiting factor when we look to these tax credits.
So I want to get to a couple of real-time questions we've had. They're pretty thematic, so I think we can cover many of them in one question. I'll give you a two-parter, Jill. One is the interaction of the effective date of the FFCRA and some of the self-quarantining activities that began prior to that. Is that just carved out, or is there any consideration for loss or lost productivity prior to the effective date?
No, the effective date is the effective date. And so if people have gone out on leave prior to that effective date, it does not get applied. And it's an interesting point, because in terms of calculating time, you may, in the payroll tax credits, it's really based on the first. And if you're looking at a pay period that carries through, you're still looking at that effective date as of April 1. So the effective date is a firm date from all applications.
And Andre, a question about headcount. So we've talked about there being some sort of motion around the under 50 employee impact from FFCRA. For the tax credits, is there a similar threshold, or does everyone under 500 employees qualify for the credits?
Yeah, there's no delineation for the tax credits for under 50. I think that there are some provisions that Jill might be able to speak to in terms of some organizations under 50 people are exempt from some of these other acts. So it's not restrictive for under 50.
Yeah, I mean, there is the exception for organizations under 50 employees in terms of having to implement and support their organizations by providing these leaves. But as I said earlier, the guidelines aren't 100% clear yet. I think there's some still working through the system in terms of understanding how those exceptions are going to be applied for. But it definitely is going to be based on an organization's ability to pay and viability to carry through on supporting their employees in this way. Got it.
And Andre, I'm going to ask you to make a note, maybe in our question number 3, go a little deeper on how this actually transacts and when. There'll be, as you said, outflows, there'll be credits, and there's sort of impacts to 2021 and 2022. So I'd love to go deeper on that, but we'll put that in the parking lot for now. Edward, I'm gonna turn to you here in a second, and then Jill, I think there's a few parts of the FFCRA we can come back to. So I think most of us have been following the recently drafted legislation called the CARES Act. It's made it through the Senate. I've not followed the news in the last few hours, but soon to make it through the House. Can you walk us through, Edward, the portion of the bill that provides relief to small businesses and how it differs from existing SBA programs that have been in place prior to the legislation?
Sure, Terry. And I think it's important to emphasize that some of the terms that I'm going to talk about may change as a result of passage in the House. We'll see on that one. Can we make a change in the slides? Thanks. And I also want to emphasize, a lot of you have experience with the SBA. Some of you may have SBA loans. That will probably be to your advantage in that you're going to have knowledge of how the system works. And the idea is that the new program, the PPP, the Paycheck Protection Program, will basically absorb any existing relationship that you might have. So let's talk about PPP just a little bit. Again, 500 employees is an important cutoff here. The determination of a max loan is important, and it is the lesser of $10 million or 2.5 times your average payroll costs in the period just prior to the loan date. The loan rates are to be determined, but you can expect somewhere, I have seen expectations somewhere in the 2 to 4% range. The allowable uses for proceeds include payroll support, employee salaries, mortgage payments, rent, utilities, and other pre-existing debt obligations. Importantly, loan forgiveness is possible, and I know that there were a number of questions from you all about loan forgiveness. Loan forgiveness is possible in an amount equal to the sum of payroll costs, rent, mortgage, interest, and utilities during the 8-week period following the loan origination date. There is a program that is expected to be put in place as well. It's employee retention credit, and that provides for employers who are carrying on trade and business, but who have had to have certain amount of their business suspended due to COVID-19, but they have maintained their payrolls. They will be able to offset 50% of qualified wages up to $10,000 per employee. And if you take advantage of the PPP program, you will not be eligible for the employee retention credit. Why don't I stop here, Terry? I've thrown a lot out quickly. You may have some questions you want to take.
Well, I think the big one is that if people have been going to the SBA website, I think there's been a little bit of confusion around something called the Economic Industry Disaster Loan Program, which has been in play for a while.
Yes.
That is not the new legislation. So maybe go a little deeper on that and what we know about I'll just call it the funnel of applications and what people might want to do practically about that.
All right. You're right. The economic industry disaster loans have been in place for a period of time, and that is not the PPP. I had a client just a couple of days ago who wanted to get ahead of PPP and be first in line if they could. They went ahead and applied for an economic industry disaster loan, knowing that the expectation is they are going to be able to fold that loan into a PPP when that program is up and running. As a practical matter, particularly you guys who have dealt with the SBA, this is a large bureaucracy. This is an enormous plan which is being put in place. The idea is to utilize the SBA system and utilize SBA lenders, but I think we can expect that there are going to be some delays as this gets put in place. It will definitely, I had mentioned initially that there could be advantages if you have an existing relationship. I think your ability to contact lenders that you know quickly will be very helpful to you. But my guess is this probably is going to take some weeks to fully unfold.
Yeah, and I'll add a perspective there. And speaking with some lenders, the chronology will be as follows. The legislation will pass, and once it has, the SBA needs to write their regs. And then once that is done, they will be able to take applications, which will then themselves go into really a singular funnel. They will come from the lenders and go through the SBA funnel. And as a perspective, the total sort of annual normal volume of the SBA is roughly $30 billion. And of course, this piece of legislation calls out $350 billion, which will have to run through the process in a matter of months. So it will be a matter of timing for sure. Edward, sort of to your question about the private equity situation, there's a question about someone that has a healthy balance sheet today, and when does it make sense? How do they qualify? I've not read anything specific to beyond the employee threshold who qualifies with respect to current cash position or balance sheet. Is that your understanding as well.
The ability to identify your losses and your exposure and communicate that effectively is going to be very important here. Anticipatory situations will probably necessarily get moved to the back. So if you have begun the process of cash flow management and you have identified what your issues are, then you'll be able to present those. And we're going to talk a little bit later about that process and ways to do that. But at the moment, I don't think, if I understand the question, Terry, I don't think we're going to be able to anticipate problems and apply for PPP ahead of time. I noticed a question came through asking for just a quick clarification on loan forgiveness, which I can do. It is expected that loan forgiveness under PPP will be possible for an amount equal to the sum of payroll costs, rent, mortgage interest, utility payments for the 8-week period following the loan origination date. Now, that could change with the final passage of the bill, but that's what the initial wording is.
Yeah, I think it goes without saying that any amount of, to your point, Edward, data collection and information gathering, whether you put that in Excel or you have a platform that allows you to put that in a separate class or layer, is critical. All of that will facilitate communication for both tax incentives and for the SBA process. I'm going to integrate some of these other questions into our fourth, but let's get on to our question number 3, and then we'll come back to some of these questions. And I want to give Andre a little bit of time to just go through the high level of the credits and maybe some of what you're experiencing in conversations with clients in the community. And I know, Andre, you've been working with Jill in some of these conversations jointly. So Jill, perhaps you can jump in as well.
Sure. So I can sort of elaborate on kind of what we're hearing and expand on some of the nuances or things that questions are being asked. So, first and foremost, we have an effective date of April 1st. So that's when you start counting how to quantify the amount of payments made for paid sick leave or family leave, and quantifying those costs against those maximums that are described in the Act, which are for people who are self-quarantining or are sick themselves. Again, it's $511 per day, or the maximum that they're getting paid per day, for up to 10 days for a maximum of $5,110. So that would be the credit for the people who are they themselves sick or are quarantining themselves and are unable to work. For the people who are caring for others, including dependents, or it could be family members, or in many cases, it's going to be caring for children that are unable to come to work and are receiving those paid sick leave amounts, then that credit maximum is $200 per day for 10 days for a total of $2,000 per person. So these are in effect going to be the bulk of the credits that are going to be able to utilize to help you save and pay for these outflows. And I mentioned earlier, the mechanism or how we do that is there's an opportunity to realize these savings in real time, so to speak, by remitting less Social Security tax to the government. Now, in our experience in talking with our clients, this isn't always something that's very easy to do. And in fact, when we are helping clients claim payroll credits, we often find that they're remitting so often, and they may be working with a payroll provider that it's unable to shut that off very quickly. So there is the option to claim the payroll credits as defined by these maximums against your payroll tax liability, which is reconciled quarterly. So that quarterly reconciliation is a payroll tax return, commonly reported on Form 941. And in that form, you'll demonstrate your total liability that you're owed to the government, and also how much you've been remitting in that quarter. And typically, especially when you're using a payroll provider, those two line items will net out. So you typically show no balance due. Now, in this situation where you have a payroll credit, you can demonstrate on that form that you've overpaid your Social Security tax and you're due a refund. Now, that's the opportunity where you get a check back from the government. Now, that being said, in our experience, that's a very lengthy process. So say starting in Q1 or starting in April 1st, you have some people who are receiving paid sick leave, and you quantify how much credit you're due. If you're unable to stop the remittance of payroll tax, then you seek to go ahead and reconcile that on your payroll tax return, which in Q2 is actually due in July. So that's where you would report it in July. And on that payroll tax return, you would showcase that you are refund due, and the government would have to process that payroll tax return and also process a check to cut back to you. Now that becomes a lengthy process, and it can be very, it takes, in our experience right now, it takes 2 to 3 months to receive that check. So if you have the opportunity to withhold your remittance or withhold your deposits in the amount of credit that you're expected to receive, then you can experience that cash savings in a more timely fashion.
Let me just, let me just add here that you want to be very careful to track all of these leaves diligently. And one with notice to the employee, but while we're talking about the tax credit component, the ability to do that is going to be much more efficient if you can track those leaves in your payroll system by adding a payroll code for both the sick leave and the emergency family leave. So I highly recommend that. And I know that payroll companies are working diligently to also help support the submittance process for them in an automated way. So that's in motion. But do look at your own ability to create a code for both categories of leave.
Jill, that's a great point, and I see some questions popping up around documentation and what are the requirements. And documentation in that real-time setting by using job codes is the best possible documentation. Right now, we're expecting to see more guidance, of course. This is all brand new. We're expecting to see regulations put forth. And also, we expect to see a simplification of the forms involved in claiming these credits. So adding a line item that's discrete for here's my computed payroll tax credit, and the attempt to make this processing more simple. We do expect those things to happen. We also expect payroll providers to react and be able to assist with claiming the credits as well. But in the interim, we have, as Jill mentioned, the opportunity, if you can't set up those project codes, those would be the most useful.
Thanks, guys. So, Edward, I want to go a little bit deeper into some of the practical matters with regard to people's cash position and the SBA programs. I'm going to presume that not everyone knows how to find the data and how to leverage this. We talked a little bit about cash flow forecasting. And I think that would probably lead nicely into all of this is going to pass. So as we work through the immediacy of these challenges, what are some of the things that people can be doing to look towards the sort of near term and further past future, as well as taking care of the immediate needs of the business?
Thanks, Terry. The application for the SBA loans is going to be on their website. And to be honest with you, I expect that to be the simple part. If you have an existing SBA relationship, you're going to call your lender and have that conversation. To get to Terry's point, what you need to be able to do is understand and communicate what your losses have been and what your future exposure is, or what you anticipate it to be. And so I'm sure that many of you out there prepare a rolling cash forecast for your business, and you're diligent about following up on it and making sure that it's an accurate tool. To the extent that you don't, that forecast really serves as your way of communicating your business's story to lenders and investors and any other stakeholder in the business that's out there. So if you haven't done that, it's really important that you tackle that issue. And from our perspective, it's internal data and external objectivity. So if you have an advisory board, then you guys prepare that cash flow forecast and you utilize your advisory board to vet it and make sure that you haven't missed anything and you are accurately presenting what you think the business is going to do. That will be vital to you through this critical process. And then, as Terry says, we are all going to come out of this thing. And that becomes a very important tool as you seek to regrow your businesses. It is a value really no matter what the circumstances are.
Yeah, and there are certainly non-bank options out there for some companies, and so being able to evidence yourself in such a manner will be critical. And Edward, I think we have chatted on the Q&A line about this, but maybe go back to one quick tactical thing about the SBA program. So there's been a couple of questions around the 2.5 time payroll function. Go back on that if you can. And one of the questions was aggregate payroll as you might file in a tax versus just the salary of a person or people. So maybe go through some of that language if you don't mind.
The language as it currently exists, Terry, is that the maximum loan amount would be the lesser of $10 million or 2.5 months of average total monthly payroll costs for the 1-year period prior to the loan date. So you're able to look back a year, you calculate the average monthly payroll, and then you take 2.5 times that. I believe that that is going to necessarily be a number which is reported and supportable by the business owner, and that may come through ADP records or some other type of business-related metric.
Yep, thank you. And Jill, another interesting question about qualifying and the 500 employee threshold. So there's been a number of questions about where these people are and where they are across legal entities and the structure of the company. So is our presumption U.S. employees of any kind, including if it's a multinational, these are U.S. employees?
You know, honestly, I have to leave that one for the attorneys. I don't have a lot of insight into where those lines are drawn.
Got it. Thank you.
Yeah.
Go ahead, Edward.
I was just going to throw out an additional point, kind of a follow-up to my question of Andre and Jill about franchise or private equity ownership. The current expectation for the SBA is that private equity ownership will count towards the 500 employee cutoff. So they will be deemed associated entities if there is single ownership. In the case of franchise organizations, it does appear that there is going to be some discretion applied by the SBA in this interpretation, and so that it will not be the case that all of those entities are aggregated and that individual franchisors or franchisees rather will be determined to be separate businesses and qualify under the cutoff of 500 employees.
Yep, understood. All right, so we're going to do Q&A in a moment. I want to let the panel leave our attendees with maybe the few most salient points that we think people can act on today or think about to get out ahead of things. And Jill, maybe we'll start off with you.
Yeah, I'd like to take an approach here of having those on the call think about whether, you know, a lot of questions have come up about should I furlough, should I lay off our workforce, how do we handle that? And I want to mention that the importance of communication and how these conversations are messaged are as important as the decisions you make. And so think about that in terms of we are all in this together, and there's a level of empathy that is unusual in this situation. And we together can make decisions, and so maybe involve your employees in decision making around if I am debating about whether somebody should be laid off because they're eligible for unemployment insurance, which, by the way, the maximum is about to go up, probably announced today, from potentially $450 a week to up to $1,050. So it's increasing $600 a week. We expect to hear that's approved today. So these decisions about whether to furlough and cut people's hours by maybe a percentage amount or to let people go is very difficult decision to make, and you really have to look at the business, the cash flow, the short term, the midterm projection for the organization. But I encourage that there be a level of openness with employees to help problem solve, because more brains involved are better than one frequently in these situations. Also, think about it maybe as a phased approach if you are thinking about laying off versus furloughing, and that it doesn't have to be one or the other, and that there are multiple scenarios here that may make sense. If the question has come up, I saw by someone that, you know, if I furlough somebody, are they able to, am I then able to lay them off? What does that mean? And you can cut people in terms of hours as into partial employment, and they may still be eligible for unemployment insurance. So there's variations here that are options rather than just laying off. And lastly, I want to encourage people to do severance agreements. Don't lose sight of that in all that we're dealing with today. Severance agreements are still a recommended approach if you're letting somebody go, if you have an opportunity to have some cash to give to people if they are being let go. I'll pause there. I could go on, but I'll pause.
Good, thank you. I'm going to read a few of these questions just in real time. And it's interesting. One of our attendees offered that ADP has begun to create codes for this situation. So thank you for that, if that is indeed true. So Jill, one of these is interesting. So can you use the emergency sick and FMLA leave before any accrued sick time you already carry on your balance sheet, or must your staff use that up first?
Yes, they can use the new emergency leave acts first, but there are multiple components here. So if you have other ways of offering relief, then all of those options are viable for the employees to take, but they can use the Emergency Relief Act available to them first.
Are there any obvious examples of where one might preclude the other, or by exercising one, you may lose another or lose the effectiveness of something else? Or shall employers try and leverage all that they can?
I would recommend leveraging all that they can. Yes.
There are a number of questions about profit versus not-for-profit. Edward, I know that the existing emergency loan programs have a different rate of roughly 100 basis points for not-for-profits. Do we know of any guidance in the PPP program specific to not-for-profits?
Not yet, Terry. I would expect there may be, although for-profits and not-for-profits are being hit similarly in this circumstance, so that may be waived.
And Jill, same question. To your knowledge, any special treatment or benefits to not-for-profits in the FFCRA?
No, the not-for-profits and for-profit are, the nonprofit and for-profit are treated the same here. Somebody did ask a question of if the nonprofit was under 50 employees, could they be still eligible for the payroll tax? And if you choose to not take the exception, if and when that is offered as a nonprofit under 50 employees, that is absolutely fine. And you would still be eligible for the payroll tax credit.
We've also received a number of questions about independent contractors, sole practitioners, small professional firms like CPAs, law firms. Can you talk a little bit about the employer's responsibility, if any, to ICs, and what sole practitioners and ICs may be able to do for themselves in this situation?
Yeah, that's a great question. And independent contractors are not part of this scenario. So because they're not an active employee, they are not eligible for these leaves. And so I am not familiar with anything that is available in terms of relief for independent contractors, unfortunately.
I will say for guidelines for the SBA program are expected to include provisions for companies that have independent contractors, in recognition that those are value add individuals.
Edward, there are continue to be a few questions about the actual application process for the SBA, and I suppose there's still yet to come information about that, but any just practical advice about where to start, how to get yourself in the queue, how to stay in touch. I know one lender mentioned to me that you should not rely solely on the E-Tran platform, that is the electronic funnel, that you might even consider mail, snail mail, and email to the lender.
Right. So this is a really good question and a very practical issue. If you have an existing SBA loan, or you have had one, and you have a relationship with a lender, then go back to them and take advantage of that connection. If this is the first time through for you, then that kind of scattergun approach for the application probably makes sense. You know, you'll want to go through the electronic application process, and you'll want to approach a bank. I'm assuming that most or all of you have relationships with banks in one way or another. The expectation is that all FDIC institutions will be participating in PPP. However, the current SBA lenders will probably be more proficient at it because they have the connections in place. You should know that the credit decisions, and I use that term rather loosely, you know, the application decisions are going to be ultimately in control of the institution that provides you the funds. The SBA will not be making, they are not going to centralize this decision making. So this will have a relationship aspect. If you need help in gathering the information so that you can paint an accurate picture of where your business is and where you expect it to be, then get that help. Utilize professionals. That will be a very wise investment for you, not only for applying for the loan, but also, as Terry says, when we come out the other side of this thing, you're going to need to be able to tell your story. And it's critically, it's the story that Jill's been talking about first and foremost, about your people. But then it's the story that gets translated into the numbers and communicated to the bankers.
Great. Andre, this one's for you. We've gotten a number of questions about credits and nonprofits. Is there any omission of the not-for-profit space in the credit decision-making process?
No, I don't think there's any discretion for not-for-profits as not being able to participate, other than the original requirements of having less than 500 employees. So those organizations should equally be able to take advantage of the payroll credit opportunity.
Thank you. And maybe another question for you, and this is going back to my prior reference to the way this all transacts. Maybe 60 to 90 seconds on the outflows, the credit, what do I have to pay back? Maybe summarize that really quickly at a high level. We've gotten 3 or 4 questions on that. I think just the practical manner of how this all goes in and out.
Yeah, so I guess the practically speaking, again, you look at the requirements of having less than 500 people. The enactment is effective April 1st. So then if you have cash payments to people on paid sick leave or are on sick leave to care for loved ones or children and are staying home, then you start to calculate what your credit is based on those maximums. And once you recognize that cash outflow, those payments subject to the maximums, equate to a credit, then you can start to decide whether or not you want to stop remittance of your payroll taxes, specifically the Social Security tax portion, or if you are unable or are having a hard time navigating how to stop the remittance or stop the deposits, then you can calculate a credit on your quarterly payroll tax return. Now, that being said, these questions are really important because this is the government's way to incentivize and to pay for people getting sick and your outflow of cash to pay for those people who are staying home and working, not working. So it's important to reach out to all the resources you have available to you, including first and foremost your payroll provider, and getting the guidance that they have, because the logistics and the blocking and tackling will be done by them. And then, dealing with payroll credits or tax credits in general, if this is your first time dealing with that subject, talking to your CPA, talking to us, asking those questions, reaching out is vital for the application of getting this money to help you through these times.
And I would like to just add a key component here that I don't want to get off this call and regret not saying, and that is that documentation is going to be key through this whole process. Make sure whether there's a requirement or not for you in this point in time for processing leave or what have you, you want to make sure that employees are clear on, one, your policy and practice during this time, and two, if they are laid off, if they're furloughed, if they're brought back after being furloughed, off to be furloughed. Whatever the process is, you document it, you give employees letters stating that they're furloughed and the reasons why, or hiring back, you give them a new hire letter. So information needs to be tracked, documentation needs to occur. You're going to want that to happen to protect yourself, as well as so employees are clear on their situation.
I really want to emphasize what Jill is saying. That is a very big deal. And I say that, from a financial standpoint, we want the records and the information. As a board member, I can tell you that the thoroughness of that documentation is very important on a go-forward basis.
And we're coming up on the hour, but we've got about 90% of the participants still logged in. So I propose we keep going a little bit longer until people drop off. So I'm happy to do that. Jill, you alluded to this, but in this window of time, is it implied that a leave of absence is intrinsically motivated by COVID, or is there a paper trail or evidentiary set of documents that people want to create around something being explicitly COVID so that it relates to tax credits and to all of these programs?
So there's not a lot of requirements that are clear right now that are required to support decisions on people taking leaves, regardless of the reason. So the law is not requiring documentation that we can see today. There aren't guidelines around that, but I would go back to my previous statement as being as clear as possible and leaving a paper trail so that when people do go out and leave, you are, one, notifying them that you are acknowledging they're going on and leave, getting the effective date, documenting that, and that communication stays clear throughout so they know how long that term is going and when they are getting close to that limit. So as you would do if you're processing FMLA before this coronavirus hit, you still had a long paper trail of notifications and tracking. That should still occur.
Good. And Edward, one clarification that I think may help people in the audience with respect to how to get into the queue of the SBA and be active now. It's our understanding that you cannot fund the current disaster loan concurrently with a PPP. That just won't happen. Is that correct?
Those are the current guidelines, Terry. And What they're proposing is that the existing emergency economic injury loan would be rolled up into the PPP.
Got it. And Jill, we have another question that I think is interesting. Do employees currently on leave or on leave before the effective date count towards the 500?
That count happens as of April 1st. So the number of employees that you have in the U.S. that are full-time, part-time, seasonal, temporary, as of April 1st is your count.
So that would presumably include someone on a maternity leave,
yes.
etc. Okay.
Yes.
Good.
Active employees.
I'm just quickly, and feel free to address any others. I'm doing the same, looking through. We still have 250 people on the line, so we'll keep going.
Go ahead.
Edward, there continues to be questions around venture-backed companies and qualifying. I think that probably references to your aggregation of people in the related entities. Beyond that, any other guidance?
Well, so current guidelines are that if you have common ownership through a fund, then those entities will be determined to be associated and therefore aggregate to the 500. My suspicion is there may end up being some loopholes here when the final guidelines come down. So if anybody out there finds themselves in that circumstance, keep your eye on this. I wouldn't think necessarily that just because you have been funded and are in control of a fund that you will be excluded ultimately from this.
Understood. And the other question that's come in a few times is a matter of personal guarantee or not. And that kind of goes back to your current relationship with the bank, but maybe for a net new loan and net new lender borrower relationship, do we have any insight into how the PPP might interact with a personal guarantee or similar?
We do not. I haven't seen anything as to that. However, my expectation would be that would not require personal guarantees within the context of the program itself. Now, if for whatever reason somebody deviated from the agreement with the SBA, then they would have some exposure there.
Sure. All right, let me see what else we have.
Let me just add one thing to your previous question, Terry, around if somebody's on a leave of absence, whether documentation has to happen, such as a medical validation of someone's illness around coronavirus to ensure that they're eligible for a leave, and that is not required today. So in previous scenarios, that has been required, specifically for FMLA, as well as paid family leave. In certain situations, that has not been identified as a requirement today. So there's a little bit of going on faith that's happening.
Yeah, and I want to get to another theme really quickly, which is basically to get the credits. And then I'll just read the question. Do I need to bring back the staff that have already laid off? So there are some people in especially hard-hit industries that have done this very, very quickly and may have laid off 50, 100 plus people. How does that interact with all of this and with the credit for people that have already been laid off prior to the event?
Actually, we just came across a situation with a client yesterday. They had laid off most of their workforce on day one and then are now slowly bringing people back. And that is totally fine. People would still be eligible for relief under the Act. It's really whatever your current scenario is. If you have active employees, they are eligible to participate, whether they've been laid off before or not.
Got it. That's helpful. There's another one here about, we'll do that offline. So I'll just read this one verbatim. So what's the best category to allow employees to benefit from maximum EDD and paid sick family leave, question mark, space, furlough, question mark, if that makes sense.
Well, so this question has come up many times. So, what's the best scenario for employees with all of these options available? How can we be the most empathetic and do best by our employees? And that's really hard to answer. I will say that I did see the stimulus relief package has in fact just gone into effect. So unemployment insurance has risen to that $10.50 maximum per week. And so that's a substantial increase on unemployment insurance. That's a good option for some employees. You can, as I think I mentioned earlier, have people who are furloughed but still eligible for that unemployment insurance partially. That might be a better scenario for some people, or as your organization requires it, it might be that you have to lay people off. So it's really going to be very much based on your what is required for you as an organization. But it might be interesting if you're really debating about whether to lay somebody off or to just have the ability to cut their hours a certain percentage. And how you decide that, you need to keep in mind whether they're non-exempt or exempt, which I can talk about a little more. But you might involve the employee in that decision-making process. Ask them to maybe look at the calculator for unemployment insurance, see what that number is, and work together to decide what might be the best scenario. Employees may have some interest in participating in that decision.
We have another interesting sort of theme of questions, which is around the financial impact of severance payments and just other associated, I'll call it unique payments based on the impact of COVID and their availability for either tax credits or for loan forgiveness. Andre, any perspective on that?
Yeah, that's pretty nuanced. I would say that we look back to what guidance has been provided, and you really, if you really have to look at, is somehow severance connected to paid sick leave or family paid leave? I mean, that will be pretty tricky to connect those dots if I'm answering that correctly. I would say that what you really look at is how much are you spending on your paid sick leave and then calculating that, capturing those costs is in effect your credit subject to maximums. So if those unique circumstances do come up, I would reach out to a payroll provider or reach out to us, and we can help you navigate and calculate that.
But I would add to that, if you're in a position to offer a severance amount, whether it's 1 week or 2 weeks, certainly I would try to do that and get a severance agreement in place for that relationship.
Looking if there are any other questions we just haven't really touched on or themes. To the panelists, anything we haven't covered, or do we think we've covered most of it?
I think we have, Terry, we certainly have, introduced some important ideas. Anybody who's out there listening should absolutely feel free to make a connection if they have specific circumstances, and we're delighted to follow up.
Agreed. All of our contact information is on the deck, which will go out. So please do, if we haven't answered your question or if there's something that comes up, please do reach out. I think we'll thank everyone for joining and wish you a very happy Friday and a good weekend. Thanks very, very much.
Thanks.
Take
Bye-bye.
care. Bye.